What's going on, guys? Welcome back to the channel. Economic Prepper here. Hope that you guys are doing very well. I wanted to respond to a number of emails and comments that I got from a video yesterday. And if I remember correctly, it was a family of 3 or 4. Basically, it was a single income family. The father is working. He's preparing for this economic collapse, this economic storm that we're seeing unfold right in front of us, brought on to the American people by none other than the Federal Reserve. And so as they're preparing, the father, he has 1 or 2 children. I think he has 1 kid and another baby on the way, if I remember correctly. Anyway, I get a lot of emails, so some of the details kind of get blurry. But the concern was that the stock market is crashing, cryptocurrency market's crashing. They're trying to prepare their family for this economic calamity that the Fed is bringing on. And one of the questions he had is, because the stock market is crashing, should I sell everything out of my 401k? And if so, how can I go about doing so? And a lot of people have this question because I got a lot of emails from you, comments in the video, but probably more emails than comments, believe it or not. But a lot of people are kind of in this situation where they're living paycheck to paycheck. They're dealing with some form of a hardship, and they're concerned about the future. They're concerned about home affordability, food prices, gas prices, our economy, what the impacts of the Fed is going to have. Is the U.S. dollar going to collapse? Are they going to have to file for bankruptcy? How are they going to keep food on the, in their refrigerator and feed their families? And I think that as we move forward, there's going to be a lot of money lost, period and point blank. But at the same time, the good news is that for those who are smart, for those who are aware, and for those who have financial planning and financial strategies in place, and they're preparing economically, there's going to be a lot of money to be made. And not to get all sciencey with you guys, and I'm no science major, and I'm no physician or anything, physics major or anything like that, but I look at the financial markets as kind of like this statement that was made in science class. And what we're going through right now is an economic cycle, which is just like any other economic cycle. However, what makes this economic cycle different is that you've got different factors at play, but the root of how economic cycles works, it remains the same. So without getting all into the details on that, just know that we've been here before. And you may not have been here in your lifetime, but this cycle that we're experiencing has happened before. So the question is, how do we make it through, and how do we make some money out of this thing? So the first thing we want to do is to survive. Now, like I said before, a lot of money is going to be lost, and some people are losing money already. However, a lot of money is going to be made, and the money being made are going to be, the people who are smart, the people who are prepared economically, they're going to be making the money. People who are panicking, they're probably going to be a casualty, unfortunately. And I look at it kind of like in science class, they said, matter is neither created nor destroyed. I don't know if you guys remember that. And I look at money, currency, value, economic value the same way, right? So when if matter is neither created nor destroyed, then that would apply to everything, right? Because what is matter? Matter is, anything that takes up mass or something like that, and, occupies space, something. I forget the exact definition of matter, but so think about it like this. If you have a piece of paper, and I don't have a piece of paper, but let's just say you got a piece of paper, right? So let me just, so you got a piece of paper, right? And I don't know if you guys remember that show in Living Color. You had Fire Marshal Bill, and he'd pull out a match. He'd be like, let me show you something, right? And so I'm not going to light this paper on fire. But if I were to light this piece of paper on fire, what would happen? Well, it would change, and it would no longer look the way it does now. So basically the fire would chemically change the composition of that piece of paper. And all of a sudden I'd have, smoke going up in the air, the fire would be burning, and my paper would be reduced to ashes. So just imagine that, since I'm not going to do that. The paper changed, it converted. And this is pretty much what we're seeing with our economy. So when they say so many trillions of dollars has been lost, the money hasn't been lost. The money has converted. The money has turned from paper into something else. And so this is what we see in these economic cycles. When you see the stock market crashing, what is happening is that there's more sellers in the market, or there's more velocity of selling than there is buying. And so the prices end up going down, right? We see this in all markets. When there's so much inventory, then the price ends up going down. We see it in the housing market. There was not enough inventory, so prices went up because the demand remained the same or it increased, right? So, and it's the same thing when you go into the grocery store. Matter of fact, my wife was in Costco the other day. A lot of people were stockpiling water in preparation for Hurricane Ian, and the cased water was running out, and they were rationing how much water you could purchase. And it was even worse in Florida. And she was saying that cased water, and I don't know how much came in the case, right? But she said cased water was normally like $4. And over the last couple of days, it was more like $8 and $9 for case water. And they were limiting how much you could buy. So this is a great example of there was more demand than there was supply. And so that drove up the price. And the exact happens in the reverse form when there's increased supply and reduced demand. And so this is why you have a stock market crash. Everyone gets scared, everyone wants to sell, and everyone's running for the exits, right? And so money is not disappearing, it's just changing hands. And I want to get into that more in a future video, but I don't want to bore you here. But if I were to make a blanket statement, and I really never try to say always or never or everyone, I would say, if you own your business, if you own a business, you pretty much create the rules. And I'm almost to a point of saying that everyone should own a business, because when you own a business, you have so much more power. You have so much more options available to you. And you can pretty much create the rules. More on that later. Now, let's talk a little bit about investing, because a lot of people had concerns and questions about their 401k and how to sell out of their 401k because cash is needed. Many people are facing potential bankruptcy and foreclosure, evictions, barely able to make ends meet, paycheck to paycheck. Visa credit cards, MasterCard, American Express credit card minimum payments are at their all-time high, and many people are reaching the limits on their credit cards. So, question is, how do I sell out of my 401k? Now, yesterday, the message I got from the viewer was asking me, is it now time to sell? Should I sell out of my 401k now? And I would always say it really depends on your own financial situation. I ended up explaining what I would do. I'm not him. But investing is like stockpiling, right? And it's kind of like, okay, if you know a storm is coming, then you would stockpile, right? You would stockpile food, supplies, water. You would stockpile fuel, possibly. Whatever fuels your generator. If you didn't have a generator, you might consider purchasing a generator for the home. So these are things that you would do in anticipation to prepare for a storm. And now, if you live in a region like Florida, so Florida's got hurricanes all the time. This is no surprise to anybody, right? So if there's storms seasonally, then that would mean that there's like these cycles where you have wonderful spring and summertime. Everyone goes out there to vacation, and then from like what is it, September till like December or something like that, you've got hurricane season. So you've got these seasons. So you have these seasons where you can just come out and play and enjoy yourself, but then you know that winter's coming, or you know that hurricane season's coming. So what would you do? You would prepare. You would make sure that you have these things that you're going to need every single year, right? And so if you were preparing because you know these cycles are coming, you're not waiting until September and a few days. Once the news starts reporting that a massive Category 4 or Category 5 hurricane's coming, you're not looking to go buy supplies then, because you know these cycles happen. You would be picking up supplies in like springtime, when no one's thinking about it, right? When the demand is low, right? So while the demand is low, all of these items are more likely at their best prices, at their lowest prices. And so you're buying this generator, you're buying umbrellas in the middle of a sunny day, because no one needs an umbrella on a sunny day. And so that's when the price will be the cheapest, right? And you're stockpiling water then. You're stockpiling generators and fuel then, right? And then you're saving it for later. Why? Because you know the economic cycle, you know that the seasonal cycle, the weather cycle, will eventually leave you in a position where you're going to need these items later. So meanwhile, while everyone's scrambling, looking for these supplies, once the news is starting to report that, hey, we're going to have this massive Category 5 hurricane coming through, you're not as worried. You're not as worried. You may have even made plans to exit the state. You may have made plans to get to higher ground. Whatever your plans are, you were seasonally, preparing for this cycle that you knew was coming. Retirement is the same way. We know that we're going to get older. We know that there will be good times economically. There will be bad times economically. You will have booms and busts. And so at the end of the day, it's no surprise that human beings get older and human beings cannot continue to work. And so this is why you economically prepare. This is one of many reasons. Heck, you can't buy supplies without economic preparation so that you have the cash to be able to buy the supplies. So if we go into, we can talk about different types of investments. I mean, you got stocks, ETFs, index funds, real estate, physical assets. You got physical assets, not just real estate. And this is what a lot of people are not talking about. There are so many different assets that I've purchased over the years. Digital assets, businesses. I've turned $100 into like $5,000. And people are like, yo, how did you do that? What did you invest in that allowed you to turn $100 into $5,000? Man, I've turned $1,000 into $100,000. But these are the things that people are not talking about. These are types of investments where you can place your money and you receive unbelievable rates of return, right? But a lot of people aren't talking about that. A lot of people aren't investing in, learning about these types of assets that can be invested in so that you can multiply your money at the rate that the wealthy do, at the rate that the 1% will do. And number one, they know what to invest in. They know how to invest. And when everyone else is selling, they're buying. And so anyway, I'm saying all this to say, I don't think that the end of the world is coming. And guess what? If the end of the world is coming, number one, I'm wrong, and that's okay because I'm not perfect. But number two, your money doesn't mean crap anyway because the world's over. So there's good news in almost all situations if you look for it. But the question is, how do you hold some of these investments, right? You got tax sheltered types of investments. You have tax sheltered ways of holding your investments, because what a lot of people don't understand, I would say most people, if I walk down the street and talk to 1,000 people, I would bet that only about 5 people would even answer this properly. What is your biggest expense and your biggest hurdle for creating wealth? What is one of the number one reasons why people, the average American person, lives paycheck to paycheck? What is the biggest hurdle? It's tax. And most people would never even say that. Why? Because most people have just assumed that, hey, this is just the way it is. People know they get taxed. You have to pay tax, and you do have to pay tax. However, depends on your strategy. And this goes along with economic preparation. A lot of people get upset with the billionaires like, the Mark Zuckerbergs, the Jeff Bezos, the Elon Musks of the world, the Warren Buffetts of the world. I remember somewhere reading that Warren Buffett said that he pays less taxes than his secretary. Now, personally, I don't know if that's actually exactly what he said, or maybe what did he say? Like, I pay a lower percentage than your secretary, because how could you, if you're, the second or third richest man in the world, how could you literally be paying less taxes than your secretary? But here's the thing. Whether that was a play on words or whatever the case is, I know that there was some validity to that. And the reason why is because the wealthy, the top 1%, they understand money. They understand how to shelter their income. They understand how to make money and make it look like they didn't make money, and they're not breaking any rules. Because guess what? Every one of them would have been locked up by now. So it's like, okay, if this is widespread public information and they're not paying taxes like some lawmakers and politicians will try to advertise, it's like, all right, well, why isn't the IRS coming after them? Why aren't the federal authorities coming after them and locking them up? And the reason why is because they're not breaking any rules. The problem is that most people don't understand the rules. And then they look at these elites and they get upset rather than trying to learn from them. And so, you've got tax sheltering strategies, and a lot of them are leveraging them. But some of these strategies are not readily available to the average person, but most of them are. And the only reason why some of these strategies are not available to the average person is, number one, it's knowledge. And number two, some of these strategies require a financial investment, and maybe the amount of money that the average person doesn't have, or the amount of money that the average person has isn't worth that particular type of strategic setup, which requires a little bit of upfront capital to get set up. Now, one of the most easiest ways is to tax shelter your income and tax shelter your investment gains and your profits is a 401k. Now, there's multiple types of 401ks. You've got, your traditional 401k, your Roth IRA, your Roth 401k. A lot of people don't even realize that there is a Roth 401k. You've got IRAs. You've got traditional IRAs, Roth IRAs, SEP IRAs. I think it's like self-directed IRAs. Self-directed. Anyway, there's a lot of different IRAs out there. Living trusts. You have trusts. You have living trusts. There's a multitude of different types of trusts. You can create corporations, LLCs, and the thing is there's so many different ways to economically prepare and do like the 1%. And I just wanted to kind of share a little bit of this with you guys. I don't want to bore you, but it's all about preparation. It's prepping, right? This is prepping at its finest. And so how do the 401ks work? Well, if you have a traditional 401k, without getting all, technical and going into all the details, if you have a 401k, most people have a traditional 401k. You work for a company, you get paid, and you will oftentimes have some percentage of your income, some percentage of your paycheck automatically directed into your 401k. So this 401k, just look at it as a bank account. All right, just for the simplest way to explain it. So it's a bank account with a label on it that says, hey, tax guy, you have to tax this differently. That's all it says. So with this bank account, with this 401k, you're picking whatever types of investments that is offered in that particular 401k plan. Stocks, ETFs, mutual funds, you name it, right? So you got that. Bonds. And now, when you put money in this 401k, there are certain rules assigned to it. And this is why the IRS can't tax it the same way as it can tax other types of investment income. And without going into all the details on this video, this is number one way to get free money. Most companies who offer a 401k, they offer a match, right? So you put money in, let's just say you've got A lot of companies are offering 4% matches, 5%, 6% matches, right? So what this means is, let's just say for easy numbers, right? For easy numbers, I know not everyone's going to make $100,000 a year. Not everyone makes six figures. That's okay. The principle applies to everyone who has a company that offers a 401k match, right? So let's just say you make $100,000 a year. 6% of $100,000 is how much? It's $6,000, right? And this is why I'm using $100,000, just because it's easy to do the math in my head. So you make $100,000 a year, and let's just say the company says, hey, we will match all of your contributions $1 for dollar up to 6%, right? So that means if you make $100,000 and you put $6,000 in your 401k, your company is going to match you with $6,000. You have already doubled your money, right? So basically the IRS has allowed you to make getting rich easier, right? Where else can you go and get a guaranteed dollar for dollar? Where else can you go and double your money with no risk, technically, depending upon what you invested in? Let's just say you had a 401k and you said, hey, I want to put my contributions into the safest no risk option possible. That way you're just getting the free money and you're not even investing in the stock market, right? Put your money in a 401k, for example. None of this is considered financial advice. I'm not a financial advisor. Always seek the counsel of a certified investment advisor or CPA or whoever else. I'm not that guy. I'm just some regular Joe sharing some information that I've learned over the years, and it's worked out well for me. So you could hypothetically take your 401k contributions, put it in your 401k account, choose the option that is risk-free. Like, I don't know, like usually there's like a cash equivalent where you're just sitting cash and wait for your employer to match you. And, most employers are matching you as you're putting the money in, or maybe once a month or once a quarter. But either way, if you put the $6,000 in this example, and your employer was matching you 1 for 1, you're going to have $12,000 at the end of the year, even though you only put in 6. So this is free money. Now, another question I got from that email was, should I sell everything? I'm scared. I'm a single income family. What do I do? Now, I can't tell him what to do. I cannot tell him what to do. But me personally, I would not sell. I'd be looking for ways to make more money. And this is one of the reasons why having a business is one of the greatest benefits financially to any family, to any individual. Having a way to control your income and to increase your income is your income will always be your greatest wealth building tool. Never forget that. And with that income, with a business, you can control how that income is received. If you have a business, you can create your own 401k. You can create your own investment plans for yourself. You can be an employee of your own company. A lot of people don't realize this. And there's a lot of tax strategies that can be implemented as a result of, owning corporations and owning LLCs. Not going to get into that in this video, but this is how you prepare. This is not waiting for the storm to show up and then figuring out what to do. This is preparing long ahead of that. This is knowing a storm will come and making sure that your family is ready. This is economic preparation. And another question that came up was, well, how do I get my money out of a 401k? I'm struggling. My family is experiencing a hardship. And so a lot of people don't realize that there's what they call hardship withdrawals. So yeah, you can technically pull money out of a 401k and avoid the penalty using certain strategies, using certain options that are available to you. And some of those, and every 401k plan, I believe, is different. So it depends on the rules that your employer put in place for your 401k. So definitely look into this. But, if you happen to be, if you or a member of your, immediate family has been, has exceptionally high medical expenses, that might be one way to pull money out of your 401k and not get hit with a penalty. Maybe you're buying a principal home. Maybe you're buying a home. So I know a lot of people probably took advantage of this going into the pandemic and over the last 18, 20 months. What, I mean, I'm not going to say what more awesome way can you pull cash out of a 401k than to put it into real estate. But a lot of people did this. In fact, the IRS increased how much you could take out without getting penalized. Like, some people were taking out a tremendous amount of money out of their 401ks and dumping it into real estate. And so this could also be one of the reasons why real estate is so stubborn to crash, why the housing market hasn't crashed so much. No one's talking about how much 401k money went into the home. And maybe I need to break that down in a future video. If you take cash out of your 401k and you use that money to invest in a principal home for you and your family, there may be rules and regulations that you need to apply or conform to in order to not be hit with massive penalties by the IRS. Because if your money was used from your 401k to go into your home to help you to purchase a home, to help you with a down payment on the home, then do you think the IRS is just going to let you pull that money out, stick it in the house, and not have any rules to follow? So we'll go into that in a future video. Maybe you're helping to pay for a family member's college tuition. Maybe you need money to avoid a foreclosure. So there's a lot of different ways that you can pull money out of a 401k and avoid the penalty. But I don't want this to be like a 6-hour video, and I could probably just talk forever on this stuff. But you guys drop me some comments down below. Let me know if you're getting some value out of this video. If you made it this far, which I can't believe if you really made it this far in this video, it's like 26 minutes in, drop me a like for the video. Consider subscribing to the channel. We can make it through this, guys. We need to be smart. Don't panic. Don't let fear take over, and we'll make it through. Y'all be safe. Economic Prepper here, signing off. Take care.